Why am I telling you not to shop for a lender when that's exactly what we want you to do? Shopping for a lender isn't about finding the lowest rate and the lowest fees.
Jeb, the number one question that we get on all of the people that reach out from the podcast, that reach out from your channel, that reach out from any of my social media is, how do I get the absolute lowest rate? I want to make sure I'm getting the lowest rate. And that myopic focus on that one important thing is the easiest way to get led down a path that ensures you do not get the best rate and terms. We talk about this being a three-legged stool for you to make that decision. The best rate and terms or competitive rate and terms are absolutely important, but you also have to have knowledge and expertise from the person that you're going to be working with, because if not, they can put you on either the wrong loan program, which the best rate on the wrong loan program can be more costly than anything else, or the wrong structure. Hey, they have an awesome rate for you, but you're paying through the nose to get it when we may be in a decreasing rate environment where that is not the best option to go with. The other most important thing is, let's say you find someone that is super knowledgeable, that has great rate and terms, but they're just a turd. You don't like them. You don't like dealing with them. You don't like the way they communicate. They make you feel dumb. They make you feel like a nuisance. That is going to be an unpleasant experience for the next 30 to 90 days, however long it takes you to find a home, get it under contract, and get that loan processed. So find someone that you connect with, that you communicate well with. And that's one of the things you should be shopping for when you're having those phone calls. Make sure that they both hear you and are asking you good questions to get all of the information to get you the right loan program and the right loan structure, and absolutely get competitive terms on that. So what we just threw at you is a lot of things that you should do. Now we're going to go through what it means and actually how to do it.
Yeah, basically what we're going to cover today, how to compare lenders, what actually matters in the process, the cost of choosing the wrong lenders, commonly costly mistakes that happen when choosing the wrong lender, signs that you found the right lender. Essentially, we're going to kind of boil it down to what you should pay attention to, right? If you're out there just shopping for the lowest rate, don't even shop. Just find a lender and move forward. You're better off doing that than trying to nitpick each single lender and call back, because what happens is people call 3, 4, 5 lenders, and then they get everything mixed up. They don't know what, up from down. And essentially they end up most of the time with worse rate and terms than they would have otherwise. So Josh, let's start with the mistakes, that are probably the most common when going and choosing a lender.
Let's start with what we started with earlier, focusing solely on rate. It's easy in that it's measurable. You can get that and hear 3 different people's numbers. But the reality, what most people don't understand, if I tell people the number one thing that I hate about my job is that our prices change every day, sometimes multiple times through the day. This morning, half of my lenders gave a reprice. So if you were up at 7 a.m. Pacific time, you had one rate sheet. At 10 a.m., you had a different rate sheet, and it was worse. Most people fail to realize that. The most confused borrowers that I talk to are the ones that have shopped with 7, 8, 9, 10 lenders, because they don't call 10 people. No one sits down and carves out 4 hours to contact 10 lenders. They make those calls over days, and they get this bit of information and this bit of information and then this bit of information. And they're like, I don't understand why these numbers are different. Well, how long have you been doing this? Well, I've been trying every afternoon. So it's been about 6 or 7 days. Sometimes over those 6 or 7 days, rates have improved 0.25%. Sometimes, like over the last month, rates have gotten worse by 0.5%. So you cannot do that. If your focus is, I'm going to get the lowest interest rate and I'm going to make calls until I hear that, you have to realize that those rates change. They change every day, multiple times through the day. And for the most part, you are not going to lock them until you have a property or you are ready to move forward with your refinance. So you are asking for a snapshot of a moment in time that is not actionable for you. So the flip side of that is, if you made no calls, you just call one person, you are relying on the goodness of the person that you reach out, that they work in a channel that has competitive terms. So meaning broker versus a bank or a mortgage bank or a call center direct lender. So you would rely on that. You would rely on the fact that that person has the knowledge that I need, that they're placing me in the right loan program and they're structuring it properly or presenting me with multiple structures so that I can make the right decision for me. The best example I can give, Jeb, we got a call from a listener probably about 10 days ago. Rates had been going up. They call and tell me, hey, we only qualify for the property we have under contract at 5.75% on an FHA. Our lender is telling us the rate is 6.5 today. I said, well, that's not correct. It is for them. They're a direct lender. Many direct lenders have very high rates on FHA and VA loans. So I said, tell me more. So, okay, well, they can get the 5.75, but we have to pay a point in 1.375 points. So 1.375% of the loan amount. And their situation was $6,200. And I price it out with their terms. And I go, that's 0 points for us today. So they loved their guy. We talk about that 3 legs of the stool, not school, 3 legs of the stool. He was very communicative, very educational, very informative, and they have a good relationship with him. They really wanted to work with the guy. But I said, do you want to work with him $6,000 worth? So that's what you have to quantify. And that is the reason for making multiple calls. Now, if you don't make the second call, you don't know. That's all you know. So a second call, again, you could get to another high price lender, especially that guy worked for a mortgage bank. If you call another mortgage bank, you're likely to get similar terms. So call a broker. Go into your bank or credit union, compare multiple different channels. But again, that myopic focus on just who's going to tell me the lowest interest rate. And then Jeb, the second piece of that, which you've seen 1,000 times, is someone goes, well, I got a better quote. Well, you got a better quote. Okay, well, tell me about the better quote because I know our terms are really competitive. So, well, the rate was 0.5% lower. The rate was 0.5% lower. It's impossible, literally impossible at the same fee structure. So you have to know how that loan is being structured. The biggest lender in the country, Rocket Mortgage, the biggest call center in the country that does VA loans, they don't tell you the points when you talk to them. They say, you're pre-approved. Here's today's interest rate. Then once you get a property under contract, here you go. That's 1.5 points. That's 1.75 points, which generally people don't want to pay. But most importantly, we have to make sure that that is what we want to do. We want the lowest interest rate and we are willing to pay points to get it, and that we're comparing across the lenders that we're shopping to get that lowest interest rate to confirm what it's going to cost to get it.
Well, the reality of Josh is most people don't know what they're shopping for. They don't. They truly don't. They just know what they've heard, and that's rate. And so that's why people shop for rate, because rate affects everything else. It affects monthly payment, which in turn affects how much you can qualify for in some cases if you're pushing that DTI. And so people just know rate. And so that's essentially the only thing, the myopic focus that you're talking about. This episode's really about diving into the other things that you have to consider. Good rate, good terms, very important. Again, it's 30% based on your stool, 33% of the stool. The other 66% is also very important, because the best rate without getting to the finish line means absolutely nothing. The best rate without having to pay points or whatever else means nothing. It's all about figuring out all the pieces of that puzzle to make sure you're getting the best deal. So we've talked about mistakes. Now let's talk about some of the things you just touched on is lender capability, right? Not all lenders are the same. Not all lenders are created equal. Not all realtors are created equal. So it's important to know what kind of, that's why it's, like you mentioned, bank, broker, credit union. What's the difference in those capabilities, Josh?
So they're generally going to have the same loan programs available, but not across the board. So many times credit unions don't do government loans. A lot of times big banks don't do government loans. We talked about mortgage banks generally have worse terms on FHA and VA loans. So if you're in a rural area, you need USDA, some lenders you call may not offer it, or they have very little experience with it. I might do a USDA loan every couple of years. If you have a very complex situation and you're going to a USDA, that's probably a criteria that you would want to put towards the top of the list. How many USDA loans have you done in the last year? 12, 15, 20? A number that you are regularly in the system, dealing with their automated underwriting, dealing with the underwriting guidelines, and know that. So one piece of that is just simply program availability. And if you're going in, most borrowers don't know what program is going to be right for them. So you generally want to be talking to people that have a full spectrum of loan products. Mm-hmm. So FHA, VA, USDA. conventional underwritten to Fannie Mae and Freddie Mac guidelines, jumbo loan programs. If you think you may need to go non-QM, meaning like a bank statement loan because you can't document income on your tax returns, a debt service coverage ratio loan for a rental, you want to make sure that you're dealing with someone that has the products available, but then also has experience with them and knows them. I guess, Jeb, the second piece that we come to, some borrowers, when I see their application, I go, this is so easy that the dumbest, worst loan officer on the planet couldn't screw this up. And there truly are situations that's drop dead simple. And what does that file look like? One or two borrowers, they've been on their jobs for 3, 4, 5 years. It's pure salary, W-2. They make $5,000 a month. They make $74,000 a year. There's no interpretation. There's no gray. The W-2s match up to the year to date on the pay stub. That person has an 800 credit score and they have $50,000 sitting in their checking account for the last 2 years, and they need $22,000 for their down payment and closing costs. It's so easy that the automated underwriting system will get it right, ask for the right stuff. There's nothing to interpret with the underwriter. So now the question is, what percentage of people are that easy? Like 1%? Maybe legitimately 1% comes across that simple. No, the other end of the spectrum is the one that's really complex. We had a listener to the show, Jeb, 3 years ago that owned 32 rental properties. He had 3 different entities. So I had his personal tax return, 3 different entity tax returns, and documentation on 40 different properties.
Josh, I had a borrower that had 70 properties back in the day. It was a nightmare, an absolute nightmare, because not only would lenders not finance him, I had to go out and find lenders because there was a max property that you could have with each lender. So it was chaos in every sense of the word. Obviously, that's, few and far between with that scenario. But I want to touch on something you mentioned about, brokers and banks and that sort of thing. People often ask me, what's a broker? What does a broker do? And I say, think of a broker as a box, right? Or a bank as a box. If you fit in that box, they can do your loan, right? If you're looking for a 30-year fixed conventional loan, pretty much any lender can do that loan. Maybe not at the best rate and the best terms, but they can do the loan. But what if you don't fit in that box? You're self-employed, you've been on your job less than a certain period of time, or you've had a change in circumstances, or whatever it is. If you don't fit in that box, what a broker does is the broker not only has that box, they have 50 other boxes that look similar to that, but maybe they're a little bigger, maybe they're a little smaller, maybe they're a little wider, whatever. And each one of those boxes being different means that they have different terms, different rates, different products. And so what a broker is able to do is find the best, box, if you will, where you fit in. And so that's, how a broker comes up with better terms, better fees. You might walk into your bank and get quoted 6% by Chase Bank. And Josh, you might have a wholesale arm with Chase Bank and be able to offer a better rate because of, a different channel. So if you're shopping out there, just make sure you're checking with a broker. And if you don't know where to start, there's actually a referral link in this video where you can get in touch with Josh. He is a broker and licensed in 20 plus states at the moment, where we can definitely guide you through the right process.
So, Jeb, you said something really important in the context of this show. I mean, the topic is don't shop for a lender, which is really, if you're going to shop for a lender, which you should, here's how to do it. What does shopping mean? As a broker, my job is to professionally shop for you. So that doesn't mean a 2-minute conversation. Okay, you're buying a house in Orange County for $800,000. You're putting 20% down. You have an 800 credit score. There's more that goes into it than that. So once I have gone through all of the details, answered all of the questions, we know it's not a condo, it's a single family residence. We know you have a limited amount of money above and beyond the down payment, so we're not looking at paying points. I do a bunch of research to make sure of what I have on the front end. And assuming it's one of those files that leans more towards the easy side, now I can shop all of the lenders that I work with and say, who has the best terms? A lot of times there's a curveball in there, a little monkey wrench. And now we say, okay, with this monkey wrench, out of my 70 investors, which 4, 5, 6 are going to be okay with that monkey wrench? And then of those, who has the best terms? So again, we're not saying call a broker and rely on them to shop for you, because there are brokers that literally are only approved with 2 or 3 wholesalers and they do 99% of their business with one. They're not really shopping for you. But done properly, that is what a broker is doing. They're taking all of your information, asking you all the questions you didn't know to ask, or gathering all of the information from you that you didn't know to share, confirming what you qualify for, going through with you, are we in agreement that this is the best option for you in terms of the loan? Now, of those 50, 60, 70 investors that we have to choose from, who has both the best terms and the best level of service, and is going to give you a great experience, because that's what I want at the end of the day. I want smooth underwriting, good technology. We don't want to have hiccups throughout the process. When we say don't shop, you wouldn't have any idea how to shop for those. When you are reaching out to someone, you are taking on faith that they're going to be able to deliver what they're offering you, and they're going to deliver it in the way that you want to receive it.
Yeah, and if you're a borrower out there, hearing no, it can be tough, and you need a lender that can, get past no in some cases. Now, sometimes you can't get past no, right? You just don't qualify. But you need somebody that can problem solve, Josh. We have problem solving down there as being part of it. And it comes with experience, right? Somebody that's been in the business a couple of months, a couple of years doesn't have the problem solving capability that somebody that's been in the business 20 years has. They just don't. And hopefully you don't need it. But if you do, that's where it matters. I mean, I hear you on the phone often talking to people having to restructure deals in order to make deals work. Whereas they came to you and said, "Hey, we don't qualify." Okay, why don't you qualify? And you go through this, the whole breakdown of where they are, and realize, no, you can qualify, but we have to restructure this. Maybe instead of putting 20% down, you're putting 10 down, paying off debts, or whatever it is, right? There's many ways to, quote unquote, skin a cat. And so it's all about finding somebody that has the knowledge and expertise to do that.
Well, let's look at that, Jeb. With that in mind, how do you know that you found the right lender? How do you know that you're in the right hands? Because in general, so we talk about the three legs of the stool: competitive terms, someone that you connect with and have a good relationship with, and then the knowledge and expertise. The knowledge and expertise is the hardest, because you can generally gauge by saying, well, this person told me they're at 5% today. Everyone else quoted me 7%. Should be a red flag that 5% is not available today. But people will go, well, they had the best terms. So that was pretty simple and straightforward. I really liked that guy. Had a 5-minute conversation. He asked about my kids. We talked about the weather. It's going to be awesome. We're all both going to the beach this weekend. I like that guy or girl. But the last part is that knowledge and expertise of knowing, do they know what they're talking about? So how do you go about determining that? So the paradox is, people would love for this to be a simple process where you go to a website or you make quick phone calls, you get someone to pick up the phone, and in 2 minutes tells you, here's what your rate is, and you can just move on.
And there's people that will do that.
There are
but
people,
it's not necessarily the right answer.
100%. Because if I have a 2-minute conversation with you, it is highly unlikely that I gathered all the information I needed to get you an accurate quote. So we probably didn't build that rapport. So you and I are not on the same page. You don't really feel like, hey, I like Josh. He hears me. He understands me. So you may not like this, but it's important that when you're making those calls, that person asks you questions. If they're not asking questions, they just take the information that you throw at them and give you back the information that you're asking for. That's a sign that you're working with an order taker, not someone who can not just solve problems. Jeb, you just talked about how do we solve problems when files hit dead ends with other lenders. How do we prevent problems? My job is to see around corners. We don't give you a pre-approval letter without a full, complete, thorough application. And oftentimes it requires more documentation. I got one of those awesome borrowers from the show, came in just this week, salaried, just got a raise, 800 credit score, minimal debt, putting 10% down on $1 million purchase. Well, once we get into all of it, a significant portion of his income is from restricted stock units, and he's only been on that job for a little over 12 months, and he just started receiving the RSUs this year. So we may be able to get over that, but it's more questions to uncover. Now, if he just called people and said, hey, my salary is $180,000 a year, I got an 800 credit score, I'm putting 10% down, I need to know what the best terms are, you're not going to have that conversation, and you're not going to know that. So it is very important that the person is listening to you, taking notes, hearing all of the information that you're offering, but then that is triggering them to ask additional questions, to clarify, to know exactly where you're at, to know what you want, to know what they are quoting you versus here's my pitch, here's my script, here's how I know that our call center has been trained to maximize the odds of getting you to apply with us so that we can get you 2 weeks, 3 weeks into a transaction, 5 days before closing. And when it changes on you, you don't have the time or ability to change gears. So really that piece of just asking good questions of you, the part about setting realistic expectations. I have people all the time, Jeb, that will tell me, oh, I talked to somebody, they said I can get pre-approved and I can have the letter in 2 hours. Is it possible? If the person were absolutely doing nothing and you were doing nothing and get everything over to them, we see lenders all the time. They give a guaranteed 7-day close on their pre-approval letter, or guaranteed 10-day close on their pre-approval letter. Do you want to close in 10 days? Have you ever found a seller that's ready to close and move out of their house in 10 days? So it's understanding what your options are, what your needs are, and what's important to you. So it's a conversation. It's not a one-way discussion where someone is just throwing crap at you. Above and beyond all that. So if we've got through this, that you feel like they've given you competitive terms, they're friendly, you like them, you're having a good conversation, they've asked good questions, they understand your goals and have explained your options and why certain things aren't an option. Okay, well, cool. Now we're getting close. I would still want to go out and look at professional references, which in 2024, soon to be 2025, that's Google reviews, Yelp reviews, Zillow reviews, wherever they aggregate their reviews. Go and look, not just see what the star rating is, how many of them there are, how long of time frame they've been collecting them, and read through them. What are people saying about them? Some of these sites now have sort of an AI summary that says, here's the 3 top bullet points of what it's like to work with Josh. So that would be my step and my process for making sure I'm getting competitive terms from someone that I like working with and connect with, that has the knowledge and expertise to make sure I have a smooth and easy process.
So with that, Josh, how does somebody actually compare lenders? I think an important piece of the puzzle, probably the most important piece, because again, most people do it wrong. So if you're going to shop and you're going to talk to multiple lenders, your plan is to get, again, the most competitive rate, the most competitive fees, while still finding the best person that you communicate with, all the things that we've talked about here. How does someone do that?
So if we're going to shop, by definition, we have to talk to more than one person. So a minimum of 2. I would not talk to any more than 5. I probably wouldn't do 5. I would do 2 to 3. I would make sure that I'm talking to people in different channels. We've talked about some of the negatives of a few channels. Some of them have good options. Some credit unions literally lend depository funds, and they have programs that don't exist anywhere else. So those are the things that you want to check. I wouldn't call 3 brokers because they're likely to have very, very similar products. They're likely to be sending to similar investors. I would call a broker. If you want to talk to your bank, cool, talk to your bank. If you want to talk to a credit union you have a relationship with, if you feel the need to call the Super Bowl commercial, go ahead and do that. But know the criteria that we're looking at and what you're judging by, and do it all within a very short period of time. You may make those calls and get general information across different timelines, but when you say, hey, I'm ready to make a decision, it needs to be within a couple of hours. Like I talked about today, we had reprices before 10 a.m. So when you look at that, it needs to be within a couple of hours. It needs to be in writing. And what is important? Does in writing mean that you have to have a loan estimate? You don't have to have a loan estimate. I'm not required to give you a loan estimate until I have a complete loan application with 6 different pieces of information. That doesn't mean that I can't give you an accurate quote of what you're looking at and expecting. In the current market, the vast majority of the business is still purchase business. So on a purchase, we've talked about this a million times. What does the lender control? The interest rate and the box A fees. APR is a number that's thrown out that people ask about. It's meant for comparative purposes. When we're looking in the modern age of 30-year fixed rates on almost every product that almost everyone is doing, what you need to know are the total box A fees and the interest rate. With that, you can compare. So does that mean that you don't want a full loan estimate or you don't want the full breakdown? Well, once you're getting pre-approved, you absolutely need the full loan estimate to know what is the bottom line. How much cash do I have to have available? But when you're comparing different lenders, oftentimes when we get horrific loan estimates over here where boxes are completely wrong. They know which ones have a limited tolerance and which ones you can make changes to. So they'll underquote prepaid interest. They won't talk about you have to pay 6 months of taxes at closing. So from that perspective, is getting an itemized fee worksheet helpful? Absolutely. So that you can see with each one of them, what is my interest rate? What is my principal and interest payment? What is my total cash to close? And where does that money go? And honestly, if you talk to 3 different lenders, those fee worksheets are not going to be identical, but they should be within a 3 to 5% range of total cash to close. So if you have someone that's super low or someone that's super high, that super high person is probably charging you a lot. The person that's super low is probably leaving something out. And that is that comparison process of shopping. It doesn't have to be a loan estimate. It can be a complete fee worksheet. And you want to ask the loan officer, are you quoting me just the loan costs? Or are you also quoting prepaid items, prepaid homeowners insurance, taxes, interest, everything that needs to be paid at closing? For shopping purposes, you don't necessarily need to know that. You just need to know, what does the loan cost me and what is my interest rate? But for your knowledge and edification of how much money do I need to be prepared to have in this process, you do want that full breakdown. And it can be another test of, does this person actually know how to accurately complete a loan estimate? Because shockingly, most loan officers don't.
So I talked to 2 or 3 people. All are similar in rate, fees for the most part. How do I know I found the right lender?
Again, we're going to rely on the other criteria. How did you connect with them? Do you have good rapport? Are they easy to get a hold of? And then with those conversations, who did you feel had the most knowledge and expertise? Because really, in that process, if you talk to 3 to 5 different lenders, 1 or 2 are going to be cheaper than the others at that lower end, but it shouldn't be in a significant way, but a little bit. I mean, $1,000 is $1,000, right? Yep. So now we should have narrowed that field to 1 or 2 that you're looking and wanting to work with. And you probably have a gut feel. And I think what would the worst thing be? Their fees and rate are identical. One of them I like, and I don't know that he's the most knowledgeable and expertise. And the other one, I didn't really connect with her, but it seems like she really knows her stuff. You got a tough decision to make there. I would lean towards the knowledge and expertise being more important than your connection. But if you truly don't like talking to someone, if they don't return your phone calls, they don't return your texts, your emails in a timely manner, it's probably a deal breaker.
No, so depending on where you are in the process, our team would love to guide you through it. Doesn't matter if you're just starting the process, you've gotten multiple quotes, you want one more quote, use us as a resource. You can get us using that referral link in the description of the video. If you're listening to this on audio, it is theeducatedhomebuyer.com/expert. We'll also get you in touch with us. But with that, guys, don't shop for the lowest fees. It's not about the lowest fees. That will set you up for failure. Make sure that you're taking all of the things that we talked about in today's video into account before making a decision. But until next time, buy right, borrow smart, build wealth. Adios.
Amigos.